Hello and welcome to another video where I will be challenging myself to make use of a well-known person, band, movie or something else familiar and turn it into a profitable trading strategy. At the moment I'm focusing on Kpop bands, and on this moment, to be specific, it is the virtual girl band called KDA. Now, as you might have seen earlier with the KDA Strategy, this challenge turned out to be one where I found one of the most profitable trading strategies under backtest circumstances so far. So, not only markets can be random, also strategies can be like this. However, with some well thought out principles behind this, of course. Because KDA exists of 3 letters, I'll make a combination of 3 indicators here. And each letter will correspond with the indicator beginning with that letter. Now I'm using the pandas TA library in this case, and there I found the following 3 corresponding indicators to match with KDA. The K will be the no sure thing indicator. And this no sure thing indicator is a technical analysis tool that combines multiple moving averages to identify trend changes and generate trading signals. The Detrended Price Oscillator will be used for the D. And this DPO is comparable to a moving average. Here the average will represent a horizontal line acting as a reference for the close price, which moves around it. And finally there is the average true range. The ATR is a technical indicator used to measure volatility in the financial markets, and it calculates the average range between the high and low prices of an asset over a specified period. Now, traders often utilize the ATR to set stop loss levels and determine position sizes or gauge potential market breakouts. And that's exactly what I'm going to do here in this strategy, determining the stop loss and take profit of this strategy with the help of the ATR. Now, the rules of this strategy are kept as simple as possible. To buy, the following conditions should be met. The DPO oscillator should be above the horizontal 0 line, and the KST line should be crossing above its signal line. The ATR is used for the stop loss, and this will be initially set to 2 times the ATR of the signaling candle. And I will also use a risk to reward ratio, which will be initially set to 1 to 2. So we risk 1 for 2 times profit. Now for short trades I do the exact opposite. DPO should be below the horizontal 0 line, and the KST line should be crossing below the signal line. And also the same stop loss and rewards apply here. So stop loss is set 2 times above the signaling candle, and take profit is 2 times the risk, or in other words the stop loss distance. There is one small remark here, because I programmed this so that if the close gets above take profit or below stop loss in case of long trades, then the close price will determine the exact profits or losses, and not the exact calculated take profit or stop losses from the strategy itself. So be aware that these calculated risk to reward values are not exact, but can differ a little bit from trade to trade. For example, in this case there is more profit taken because the candle closes higher than the calculated take profit point. And this can also occur with losing trades. So you might have a candle that closes lower than the calculated stop loss. And maybe someone can give a tip in the comments below how to make the bot close at these exact points, because I could not find this option. But nonetheless, it is all about the strategy's performance, so let's continue. Let's load the data in this notebook I created and program the rules so that I can later turn them into code for the backtest engine. Hopefully I'm on track to create a very profitable and low risk strategy here. So before I do anything, let's first import the necessary libraries, and then I'm going to upload the dataset to Google Colab. Followed by the creation of the data frame and then showing its contents. To make use of the indicators, I have to install the pandas.ta library module here, which I'll do next. And after it's installed, I can import the module so that I can create the indicators. Now that I have loaded the pandas.ta module, I will create my first indicator, which is the no sure thing indicator. And I can use the help function to see how to configure this one. Now, based on the output of the help function, to add the KST, I'll only have to add the close price as input for the indicator, and I will receive two outputs. Let's first print the output and then see how these output columns are called. You can see here that the first column is called KST and then all the values that are used for the calculations. And the signal line does the same here as well. 9 is the default 9 periods of this signal. Let's add them now to the data frame like this, and you will see that I will use the column names as reference for filling the data frame. And I can then finally show the complete data frame. Now that this is done, I will add the DPO oscillator, and first I'll have to open the help function for the details. And then again we can read that the indicator takes the close price as input. This time I will also set the look ahead to false because I tried this earlier in a test notebook and then I got no output, but after I used this I got some. So now here the output is called DPO_20, but since there is only one output from this indicator, I can just output this to the data frame. And finally I'm going to use the ATR to determine the stop loss levels. This indicator uses 3 input values for its calculation, close, high and low. So I'll add this to the indicator, and since there is only one output here as well, I can add this directly to the data frame. And also show the complete data frame with all the indicators set now. And now that I have all the indicators in place, let's continue with the creation of the signals. Here I'm going to create an additional column that will save the long or short signal. And if I run this function, all the output will be loaded into the signal column. And I'll show the data frame to see what I mean. You see here at the end I have this signal column and it indicates if there is a short, neutral or long condition. And now I can add a second column where we can detect if the advice has changed. What it does, it compares the current signal value with the last value, and if there is a difference, it sets the advice change cell to true. And you can see it here in this following output. So now I have all the indicator columns, the signals given by my trading rules, and the signal when the advice has been changed. Now I have to create a calculation that determines the stop loss and take profit points that will be used by the trading bot as exit points. So let's do that quickly now. And here I have created a function that determines the stop loss and take profit values of the candle close where the signal to buy or sell occurs. It takes two variables to determine these distances. The ATR SL variable sets the difference of the stop loss point in relation to the buy price when there is a long or short signal, and this buy price is the close price of that signaling candle, by the way. Then the RR variable sets the distance of the reward in relation to the stop loss. So if I want to have a 1-to-1 relation to the stop loss distance, I will set this to 1. But if I want to have a 1-to-2 RR setting, then I'll set this to 2 in the variable. The other part of the function is set to calculate this all and then add the stop loss and take profits together with the buy price of that time to 3 columns. And as long as there is a long signal, these values will be used. But if there is no signal anymore, these values will be set to none. Based on all these values, I can now create the sell signals for the backtest. Now I will have to run the function with the data frame as input. And as you can see, after running this function, I can now see all the indicator values, stop loss, take profits and buy levels. And this all seems to look pretty good to me. So now let's make this graphical for an additional visual check. And to do this, I have created this code so that I can make a plot of the data frame to see if I'm in the right direction with this setup. The following plot shows the close price, stop loss, take profit and buy price, and it also shows the KST and DPO indicators in subplots. And as we all can see, at every trade start there will be lines drawn for stop loss, take profit and buy price. And also from now on, this is a matter of playing around with the stop loss and take profit multiplication factors to see at which values the best results come back. However, I have an optimization functionality in my trading bot, and I will make use of that later to see if I can get better settings for these variables. But first I'll have to make the actual code for use with the backtesting engine. I will do this off screen because it's tedious work and also takes too much time to show in this video. I will make these files available for my Patreons so that you also can see how these are coded and optimizable on the take profit and stop loss settings. So let's continue with the backtesting results next to see how this idea will perform on the backtest dataset. And after these backtests, where I use the KST and DPO with their default settings, and with the initial stop loss level of 2 times the ATR and a 1 to 2 risk to reward level, I get the following results. The profits are very good and more than half of the trading pairs respond positively to this strategy. But overall I'm a little bit disappointing on the win rate, drawdown and the calculated ratios. For some reason I expected better results from a risk-reward system in trading, where a lot of traders are so stoked on about. Especially if you look at the lower time frames, it seems that calculating stop losses and take profits based on ATR gets more and more risky because of the win rate drops to a meager 30%. And also the drawdown is almost, and in some cases, 100%. Now, this can be all about the setup of the strategy and the indicators I use here, and might say nothing about the risk-reward setup specific, but for some reason I expected higher numbers. And maybe the profit plot on a high level gives more insight. Now again, the largest drawdown occurs during the start of the last bear market. Also, this strategy seems to suffer from pumps in certain crypto pairs as well, and might I say also dumps, as you can see from the CRV USDT pair. But maybe I have more luck with the futures pairs in this case. So let's find out if trading with futures provide better results. Now I always say that the results of futures trading cannot be compared one-to-one with the spot trading results here. This is because of the differences in trading pairs available and the availability of the time range data, which is smaller than spot data. But since futures trading goes both long and short, it doubles the amount of chances a strategy gets to make trades. However, unfortunately, the results of futures trading are not that great either in this case. Here I'm not too worried about the profit percentage, but I am mostly interested in the win rate, drawdown and ratios involved with trading. And as you can see, the ratios are somewhat better, but the win rate and drawdown are almost the same as spot trading. Also, the amount of pairs that respond positively to futures trading is almost the same as with spot trading. Looking at the overall profit plot of this trading system, the most noticeable things here are the better upward slope this bot has, and also the parallelism shows that the bot is almost always busy with trading. Now the drawdowns are almost comparable with market sentiment, but here I have mixed feelings, because shouldn't this strategy also make profits when there are bearish market circumstances as well? Now, more research has to be done if you think this is still the strategy for you, but in this case I will quickly go to the next stage of this video. So now that I know which type of trading and time frame has the most chance of future profitability, I had to find out next which settings are actually the optimal ones for setting the stop loss based on the ATR and the take profit point, which is a factor of the stop loss distance. Now actually I did 2 runs of optimization here. One where I optimized the stop loss and risk to reward variables, and one including the optimization of ROI and stop loss as well. But in the end, both optimization runs did not manage to improve the original settings of the strategy in such a way that it performed way better. The profit or win rate might have gotten better with these optimized settings, but the end score of all these variables stayed behind of the initial backtest. So apparently there was nothing to improve much anymore. Now you can surely argue that the way the stop loss and take profit points are wrongly set up, or that the actual points where losses and profits are taken are not at the correct levels, or that a trade should be exited at the exact moment where the price hits the level and then exit the trade instead of waiting for a candle close. And also the indicators that initial the trade could have been optimized or might not have been the correct ones for this method. And from a certain point of view, these are all valid critiques. However, this is a challenge to create the KDA trading strategy and is still a serious attempt to find the best trading strategy overall. And now you might wonder, where does this attempt end up in the total strategy league overall? And it ends up somewhere in the middle of the total list of trading strategies that I have tested so far. So as you can see, not such a bad attempt overall. And the good thing about this is that we have another tool in our toolkit to make use of future trading strategies. The usage of stop loss and take profit points to use in a trading strategy. And thus we come to the end of this video. I tried to be a bit more high level and get quicker to the answer to the question if a strategy has a high chance to be profitable in the future or not, but as you can see from the length of this one, it is not always possible. And if you think that some parts can get left out of these videos, then please comment it in the comment section. But if you like these kinds of videos, then also leave a comment because I really like your feedback. Also, please give a thumbs up and subscribe to my channel if you haven't done already so, because the YouTube algorithm really punishes small channels that do not generate millions of views and likes and comments and such. And finally, many thanks to my Patreons that support me with a small donation. If you become one, you will also enjoy the benefits of getting access to all the notebooks you see and the actual backtesting strategy code for your own usage. For now, this is the end of this video, and I will see you in the next one. Goodbye!